Hey guys, welcome to this week's edition of the Friday Wrap, also known as the $100 giveaway. Let's minimize me and let's get straight into it. Don't focus on the short term when investing. Let's have a look at what I'm talking about. As always, the general advice warning, don't run away and make any changes. Don't take any actions based on what you hear me talk about. If you do think of a good idea for yourself, give us a call. Let's talk about you and we will advise you appropriately. All right, focusing on short-term volatility is bad. If we're investing in growth assets like shares, managed funds, and property, that's a long-term strategy. And we need to take our strategy and focus on the long term. If you focus on the short term, at the moment, the market is going backwards. 1 in 5, 2 in 10, 3 in 15 years, the market will go backwards. If you focus on those, it may lead you to make some poor decisions, i.e. selling when you shouldn't be selling. If you are nervous, what you should do is zoom out. Let me show you what I mean. The ASX over the previous 12 months started up here around $7,500, fell all the way down here under 6,500. We've had a little bit of a bounce back over the last month. What is that mean? A 6.97% drop. So if you focus on the last 12 months, we've dropped by 6.97%. When you take dividends into consideration, it's down by 2.73%. A couple of weeks ago, we talked about dividend reinvestment and how important that is. You can see how important it is because if we've got reinvested dividends, we haven't actually taken as big a hit as what the market's fallen because we've got more money buying more assets, lifting the value of what we own. All right, but let's zoom out. Wow, hang on a minute. All of a sudden, it doesn't look so bad. That there is the last 12 months. But if we take it over the last 20 years, yeah, it's a roller coaster of a ride, but we're up 223%. If we take dividends into consideration, we're up 518%. During that time, we've gone through the global financial crisis. We've taken this big hit here in 2020 with COVID, but overall, we're up and to the right, okay? We've increased by 518% in the last 20 years, whereas in the last 12 months, we're down by 6.9 or 2.73%, whichever way you look at it. So, a couple of things. This is a bit of a chart with a lot of information. What's Jace going to say about this down here? Okay, if you are a growth-oriented investor and if you are investing in growth-oriented assets, yes, it's a long-term plan. We're talking about a 10-year outlook. The market may fall by 15% in any year. You are going to have 2 or 3 negative years in 10. It is just what it does. It's the nature of the beast. But it doesn't mean we shouldn't play there because the returns over the time, over the long term, are actually quite good, historically speaking anyway. All right, this week's $100. I'm going to make you work for it. Tell me how much the Australian market fell during this period here of the GFC. You can go and Google it. How much did the Australian market fall during the GFC? Give me a number. I'm not going to be bang on the number. I want to be near enough, okay? But that's this week's $100. Send me your email. Everybody who sends me an email goes onto an Excel spreadsheet in the order in which they replied, and then I use a random number generator after 5 p.m. on Sunday to determine who wins this week's $100. I'm really enjoying doing this. The guys who are getting the $100, I don't think they think it's too bad either. All right, guys, that's me for this week. Have a great weekend. See you next week.